where do you have prices going in the near term?
So when we're talking about prices, it's all about what if, right? So what if the demand scenario plays out the way it's currently thought, or the general consensus? What if OPEC compliance is 100%? So if we see those two factors, and 100% is probably a little bit optimistic, what may happen and what's likely to happen is that the oil markets move to a net draw or an undersupplied position by around July, August of this year. Now, that's going to be very supportive of the current $40 to $50 a barrel price point for Brent. But the other thing that's really going to determine prices is this massive build in storage that obviously we've accrued since the beginning of the pandemic. If you take February to May, you've got an average build position oversupply of 14 million barrels a day. So we've effectively built about 2 billion barrels of additional storage. We definitely need to drain that before we can see prices move materially above that kind of 40 to 50 price structure.
Thom, Rosanna joining the conversation, and I want to pick you up on that OPEC compliance point, because Saudi Arabia, for example, has seen the value of its oil exports plunge 21.9% year on year, and yet it's still overcompensating in these supply cuts. Do you see it continuing to do this while there's weakness in compliance among other members?
They have done this, and they probably will continue to do it. So some of the uncertainty around the current cuts is before the extension to July, we did see Saudi Arabia and its Arab allies, Kuwait and the UAE, say they were going to actually make additional cuts on top of the 9.7 million barrel they pledge. So typically when we see Saudi Arabia coming out and saying it's going to do more, it means that they're seeing that other people are not doing enough. So we do think that they'll continue to have to play a little bit of that role to ensure that they can control the market.
And on that storage glut issue, when do you see that being resolved? And when are we going to get to a point of pre-virus price levels, if that's even possible?
Yeah, I mean, again, the further you move out to the right, the more what ifs we get into the equation, right? But if we maintain the recovery, we don't get a second wave, and of course, that's obviously the big wild card here. But if the demand plays out the way like the IEA is expecting, and we do see 75 to 100% compliance from OPEC, and we do see US shale continue to be under pressure the way it is at the moment, then we could be seeing the drainage of that 2 billion barrel a day storage by mid-2021, but that's certainly going to be the earliest point. It could linger into 2022.